Retailers posted a 3% rise in sales in December. That's the single biggest monthly gain since April of 2008. Ken Perkins is president of Retail Metrics. He says a last-minute sales surge before and after Christmas, quote, saved the day. He joins us now from our Boston newsroom with more on his assessment and his outlook. Mr. Perkins, welcome to Bloomberg News. Thanks for joining us.
Thanks for having me, Mark.
Mr. Perkins, did this number surprise you as well?
Yes, it did. It was a little bit stronger than we would have thought. I thought the upside potential here was for maybe 2.3% at the high end. The estimates were coming up as the month progressed due to the late surge in sales we saw prior to Christmas. And then the clearance sales were pretty robust in terms of traffic and conversion after Christmas. So it was definitely better than we thought it would be.
Mr. Perkins, what was the enticement to get consumers to spend money? You know what 2009 was like. A lot of people were saving their money in the event that they might get laid off. A lot of people just were not opening up their wallets to spend. They were very conservative. What happened?
Yeah, you're absolutely right. I mean, there was definitely a more conservative mood this year than we've seen, but not as conservative as last year. Remember, last year the sky was falling, and we were up against extremely easy comparisons. So even though we're up 3%, we didn't recoup the 3.5% we gave back last year. So these numbers aren't quite as strong as they might look on the surface. But there were still some deals out there to be had. Retailers managed their inventories pretty well, had some decent promotions to drive consumers into the stores. And they played the game of chicken really well with consumers. They didn't go too crazy in terms of marking things down drastically and waited out the consumer, and that's why we had the late surge.
So in that game of chicken, who blinked first?
Well, for once, it was the consumers. Usually it's the retailers. Last year especially, they were in panic mode, obviously with heavy inventory positions and no one shopping their stores. This year they came in, they had plenty of time to prepare. Their inventories were well thought out. Their planned promotions were well thought out, and as a result of that, their fourth quarter earnings should look pretty good. Our Retail Metrics earnings index of 122 retailers in the U.S. is expected to be up 28.5%, and that doesn't include all the retailers that guided upward today.
And were those pre-announcements of fourth quarter earnings, was that a major impetus for this, do you think?
I think I think so. They wouldn't have got it up if they weren't able to hold margins as well as they were, and the traffic levels weren't as good as they were in terms of the weeks 4 and 5 in December. So we would expect that number to go up over 30%, given these positive pre-announcements, unless January turns out to be, a complete disaster.
Are you surprised? Because the numbers that we have here, 72% of retailers beat expectations, while just 28 missed. Is that something that was on your radar screen? Does that shock you?
It doesn't completely shock us, because usually when we see the estimates being revised upward the week before same-store sales report date, that typically suggests that in the aggregate they're going to surprise on the upside. There's a pretty strong correlation between those two movements. So while it didn't completely surprise us, maybe the 72% was a little on the high end that we would have expected. We also want to keep in mind here that these estimates were relatively conservative. Retail managements have been trying to keep the expectations down somewhat and then to over-deliver. So, but still, that's the kind of thing you want to see at this stage, some recovery in the retailers.
Well, speaking of this stage, January inventories, as you know, are still low. Does that give you pause? Are you cautious for this month?
We are a bit cautious for this month. If you go out into the stores and shop them right now, there's not a lot of inventory on the shelves, particularly clearance inventory. And while gift card sales were better than last year, they weren't, drastically up. So we would expect a pause here as consumers take a breather after having spent probably a bit more than they might have wanted to during the holiday shopping season. So January could have the potential to be slow. And
with inventories low, we should also mention that that's possible that retailers therefore are going to limit markdowns, correct?
That is correct, and that's the key here. This has been absolutely huge for the retailers. They've done a fabulous job this year relative to last year in terms of limiting markdowns and maintaining that margin so they can drive the bottom line to higher levels, and that's what investors obviously want to see. But now we need to see some top-line growth.
Right. Mr. Perkins, we have about 15 seconds left. What's the retail sector going to look like in 2010?
We think it's going to be pretty soft the first 6 months of this year, and if we can see the labor market turn around, there's a lot of chance for some pent-up demand to drive sales in the second half.
Ken Perkins, president of Retail Metrics, joining us from our newsroom from Boston. Mr. Perkins, thanks. Appreciate it.
Thank you.